Hello and welcome to the truth about brokers and what to do about it. Okay, so let's remind ourselves how a broker is supposed to make the money, and that's either via the spread or the commission. The only trouble is, for a broker to make a lot of money, they need traders that are trading very big with very big accounts, they're trading frequently, and that they're trading profitably so that they can carry on doing that. And there's not a huge amount of those traders around. The other problem for brokers is it's a very competitive industry, so those commission charges and the spreads are all very tight, so it makes it that a little bit harder for them to make money. But there is another way that brokers can make money, and that's out of beginners or inexperienced traders, non-profitable traders, and that's what we're going to have a talk about in this video. And hopefully this is going to explain why so many of the adverts that you see from brokers seem to be targeted at beginners with the language that they use in the adverts. The other way that brokers can make money then comes from the fact that 95% of trading accounts that get opened, the trader loses the money that they put in that account just by making bad trading decisions. Now that seems quite a frightening statistic, but just let me remind you of just one thing. There was a book in the US that was published which interviewed the top 10 currency traders in the US, and 9 out of 10 of those top traders in the US had all blown up a trading account when they started out in their trading careers, and the only one that didn't practiced solidly for 6 months before starting live trading. So the way that brokers make money out of beginner non-profitable traders is that instead of your trades going off to the market, the broker takes the other side of the trade. That means that if you win, the broker pays you, but if you lose, then the broker gets that money. So the money goes from your account to his account quite legitimately, plus that little bit of commission as well and the spread. And this happens regardless of what the broker says on the website. They all say straight through processing, no dealing desk, but I'm telling you, the only time it goes to the market is when you're consistently profitable and there doesn't happen to be another trader in their pool of traders that's got the opposite position, because it's expensive for them to go to the market because they've got to pay the bank spread. Of course, this creates a problem because it's now a conflict of interest, because if you win, the broker's losing, but the broker is your connection to the currency markets, and there's quite a few things they can do that just give you that little helping hand to make sure you're in that group of 95% of accounts where the money is going to be lost. Okay, so let's take a look at these. The first one is where they could cause your stop loss to be hit. Now there's a limit to how much they can move the price that you see on the charts, but don't forget they would normally know where your stop loss is, so if the market price is pretty close, then they could be tempted to nudge that just to take out your stop loss and cause you to lose the trade. They could just freeze the platform so it just doesn't respond to any commands, and because they do have traders working for them, so they know when it's a good time to enter or a good time to exit, and they could just freeze the platform at those moments. On some occasions they can just disconnect the platform where it just logs you out, so you have to log back in again. They can also trigger your pending order, so again, if they think the market really isn't favourable for your pending order, they could just nudge the price so it actually triggers, and that would invariably then go to a stop loss. They could avoid you take profits. They can do execution delays, so when you place an order either to open or close, they could deliberately delay that. We've got slippage, where there's a difference between the price that you requested and the price you obtained, and the weapon of choice really, spikes in the spread, because the spread doesn't appear on your charts. You only ever see the bid price, so it doesn't show up there. It doesn't even show up in the history. And a spike in the spread, I mean, that can knock out a stop loss, because a stop loss, say on a sell trade, is based on the ask price. Now none of this is illegal, because all of these things that I mentioned can happen legitimately just in the course of a normal working day, so it's quite hard to discern if it's something that the broker is creating or if it's something genuine. But you do need to know that there is software modules that the brokers can buy. There's a whole market of software that they plug into their server. They call server plugins that actually do all of these things that I've mentioned automatically. Now thankfully there are some mitigation techniques to deal with this. The first one, of course, is to choose your broker carefully and just check out reviews. It's a little easier said than done because you can always find a bad review for a broker, and sometimes some of their accounts, perhaps where there's a large deposit, they're fine, but maybe some of their smaller accounts where you need a smaller deposit, they can be a problem. And sometimes a broker can start good and then turn bad, so it can be quite a difficult decision. The next thing is really careful logging. What you want is a system in place that when you open a trade, it logs for you just what the execution time was on that trade and also what the slippage was. Another big one really that a lot of professional traders use is to have hidden stop losses, hidden pending orders, hidden take profit. It's not necessary for you to tell a broker exactly what your stop loss is. There's a technique where you can have a hidden stop loss, and that should help prevent some of those things that we talked about earlier, and we're going to show you how to do that in a moment. And finally, you can have multiple accounts with multiple brokers. This is really where you're kind of edging your bets a little bit. Perhaps a couple of brokers that you don't know about, and you can allow you to decide perhaps which is the best, so you can compare how they're performing on a sort of trade by trade basis. So what you're doing there is when you perform a trade, you're replicating it on both accounts at the same time and with both brokers. Okay, so let's show you how to get going with this hidden stop loss, hidden pending orders. The first thing to say is you need to avoid any trading platform that runs through a web browser. Because the problem is there, you're connecting to the broker's server, so they're going to be able to see everything you're doing, even down to mouse clicks, so you're not going to be able to hide anything. So what you need is a platform that actually installs on your computer, and by far the most popular platform, as I'm sure you know, is Metatrader. Thankfully, it is available through most brokers and it's free to use because the broker pays for the license, but the software is actually written by a third party. Now, it doesn't look quite as pretty straight out of the box, but that's because it's designed to be fully configurable, and it also doesn't natively support hidden stop loss, hidden pending orders, but thankfully it is extendable, so you can add in software that will actually do this. Now, here at Runwise FX we've created such software. Now, I just don't want this video just to be a sales pitch for our software, so you're very welcome to find a different solution, but I'm just going to use it as an example so you know what kind of functionality you need. Okay, so let's show you how it works. If we switch to a chart that's connected to our software, so we've got the hidden stop loss there, which is shown by this panel. It's currently set to auto, so it just works it out automatically for you. It's got like a built-in indicator to do that, but we still do set a broker stop loss, so that is there, but it's deliberately further away, because the further away it is, the harder it is for the broker to hit that, and it's the hidden stop loss that's used for the lot size calculation. Or by the way, Metatrader doesn't natively calculate the lot size for you, so we do it in our software as well. And then we've got our take profit lines here, and again this is hidden take profit, so it's just shown there. It's actually just set to scale out of the trade. As it hits the first line, it'll exit a quarter of the trade and 50%, and it'll raise the stop loss as it hits the target. And we've also got that hidden pending orders there in our rules. Available, and it does all the logging as well that we mentioned, where it'll log everything to a CSV file so you can see all the execution times and slippage, and it also does the multiple account capability as well, so when you press the open trade button it can do that on multiple accounts. If you didn't want to use this software, the alternative would be something like a trade copier that would do multiple accounts, but the trouble with that is the way it works is it sees that a trade is opened on one account and then opens it on the other, and there's like an inherent delay there. There's going to be slippage, and it could mean that on one account the trade doesn't win and on the other account it does. Now this is a very big piece of software. There's lots of built-in indicators, there's all sorts of rules, and you can actually create your own rules, and it does all sorts of like that's like a symbol leaderboard where it ranks all the currency pairs, news events. So if that's a little bit too much for you, what we've also got is like a standalone EA. I'll just load it up so you can just see what it looks like. So this just runs on your charts, completely separate to what I was showing you just then. There's no additional software, it's just there on your chart. But it does these essentials. It's got the hidden stop loss, and it will, when you open a trade, set a broker stop loss as well, just a bit further away. And it's got those take profit targets as well. And you've got the lot size calculation, and it does the hidden pending orders and a bit of trailing stop. And this is actually available, this EA is available within the marketplace. So if you just go there and just type in Runwise FX, that's the EA there, and we've got a few other little things as well, so you can with the indicators and so on. So that's the kind of thing you need to be able to do that with the hidden stop losses. And the final thing to say is that all our software just works on the bid price, which is the price that you see on the chart, so nothing's going to be caught out by spikes in the spread. Okay, well, thank you very much for watching. Please feel free to visit our website, runwisefx.com, and just remember, your broker is not your friend.